welcome back. It's good to see you.
Great to see you,
especially
Scott.
on this day. How are you?
Yeah.
What do you make of this?
Well, markets don't like uncertainty. They like visibility. They like moats. So markets are a little scared today. To me, it's an overreaction. I mean, Nvidia decline is the worst since March 2020, and we know that ended up being a huge opportunity for investors. So I think it's not a fun day, but I'd be looking at this as an opportunity.
I've been thinking about, the people who've been coming on today, of all sort of professions, whether it's a strategist or investor or whatever, analyst, defending all this or saying it's overblown. How do we know? What if it's not? And if it isn't, what does that mean?
We don't know if it's overblown. You're right. But this is the nature of technology. I'd be personally surprised if Nvidia became Betamax in the past week. I mean, that's really would be the kind of change that would be required to really justify selling Nvidia here. And given, I think, the need for AI because of global labor shortage and Nvidia chip dominance is still strong, unless a new model emerges that doesn't require GPUs entirely, I'd say that markets just generally do fire-ready aim. I mean, I think it's hard to know, though.
I won't disagree with you on that. I mean, that's how the market tends to do that. But a lot of AI was sort of sold to investors on a hope and a dream, right? We haven't seen, in many cases, the ability yet to monetize all of this, or at least to have a sizable return on the investment that a lot of these hyperscalers are make tens of billions of dollars that they're pledging to spend. Doesn't that matter? I mean, what if some of that hope and dream just doesn't come to the degree that we thought, or we decide that it wasn't worth the money that we were willing to pay for it?
I mean, these are fair questions. If Nvidia was at 100 PE, I'd probably say that there's too much good news priced in, but the PE is around 30 times. I'm not sure that that's very demanding for investors, and if you look a couple years out, it's in the 20s. I don't think Nvidia is priced for perfection.
Is the market itself?
I don't think so. I mean, the 10-year now is backing off to 4.5, so you're still paying over 20 times for a 10-year bond. The median PE in the S&P is around 18 times.
Yeah, but I mean, because it's skewed, though, because of the mega caps, we're still like 22-ish times. So, earnings have to be really good from here on out, right? Don't tell me about multiple expansion again driving this train. You got to put up or shut up when it comes to earnings this period.
That's right. But, I've been researching companies since the early 90s, so over 34 years. I never found a PE for a high-quality company to be at 22 times, let's say for Mag 7, to be a demanding multiple. Again, I think if you're talking about price for perfection, it really has to be stocks where you have to back into the NPV of 100% earnings growth forever.
What happens if, at bare minimum, we are questioning NASDAQ stocks for the foreseeable future? Like, this doesn't feel like, tomorrow everything's going to be great kind of deal. So as long as we're doing that, is there enough momentum behind some of these other areas of the market that this market as a whole can be okay?
Well, today, market breadth's actually pretty good.
Yeah, financials, healthcare, staples, they're green. Dow's up, almost 200.
That's right. Even in NASDAQ, we have stocks that are up.
Apple, Uber, Meta, yeah.
And I think that year to date, we have 3 weeks in, and year to date, Bitcoin's outperforming, small caps outperforming financials. So I think the market does look pretty healthy. I would say it's also very encouraging that if we can close on the S&P above 5881 by the end of this week, it really solidifies that 2025 is going to be probably a double-digit gain year.
Tom Lee breaks his silence and talks about his honest and unfiltered opinions regarding the Nvidia stock as of recent. Nvidia, a powerhouse in the tech industry, saw its shares take a sharp nosedive by nearly 17% on a recent Monday, triggered by China's DeepSeek AI that had the market abuzz. Could this be a sign of a shifting balance in the great AI rivalry between China and the US? Tom Lee thinks we are missing something huge in the story, and there is only one way to find out. Welcome back to Investocracy.
by 3%, fueled by China's AI startup DeepSeek. Nvidia shares rebounding a bit this morning after wiping out almost $600 billion in market cap yesterday. Of course, that is the biggest one-day market cap loss in U.S. history, although the rotation, Jim, was to some areas of tech, too.
Yes, indeed. And remember, the second worst was also Nvidia during the watch party period. The stock is up. What I would say is there'll be heat-seeking missiles coming after that stock up. And if you really want to buy it, wait till they send it down $2-3, because that's been the usual practice here. Look, it's no doubt about it that people just say they're the blast zone. I like Semblus. I go to Semblus a lot from JP Morgan, and he's saying, listen, before you just write this off, remember that there are real winners. There's winners and losers, and he's saying that Amazon's a winner. They benefit high quality. They can Amazon, Apple, Meta, and some lesser extent Google winners. But Nvidia, we point out, is at David one of the shoot first asked questions later. The PE based on forward earnings expectations declined toward the very low end of the range. And I was watching last night a great video after CES with a chart. You know, it's on YouTube, huge. And I just thought, you know what? We're now thinking. We went from thinking it's great to thinking there's really no use to it. But I keep coming back to the next generation is about robots, and it's about self-driving. It's not about ask ChatGPT where it might hallucinate or not.
Right.
Come on, let's get serious here.
Right. Well, I don't think that anybody is still. I don't really think there's a great deal of questioning as to the long-term impact of AI, Jim.
Right.
Okay. What we had yesterday, of course, was a question as to whether or not there are going to be ways to do it more cheaply, that is going to require less compute and therefore less power, perhaps.
Right.
And even though it was a broad sell-off in some ways, it was very distinctive in terms of it was Nvidia, it was Broadcom, it was anybody really in the data center and or providing power to the data center. But and the fact is, Microsoft did not sell off that much. Alphabet did not sell off that much. Amazon, I mean, and
they're potential winners.
Right now, Alphabet, I don't know, maybe
well, it's
not
a tight,
as much.
tough one.
This
could hurt
this
them.
distillation that's happening. In other words, that how they DeepSeek distilled from OpenAI and what that means in terms of the commoditization overall of all of these models.
Right.
I do wonder, for example, if OpenAI was trading as a public company, which it may at some point. What would have happened to it yesterday?
I know. And how much did this outfit, did these things
dramatically
steal from OpenAI?
They may have.
I have Benioff on tonight to talk specifically about how that is the denouement.
Tom Lee, head of research at Fundstrat Global Advisors, seems to think the panic surrounding Nvidia is overblown. In what can be described as investor therapy during CNBC's closing bell, Lee articulated a message of calm. It's an overreaction, he declared, comparing Nvidia's decline to its tumultuous times in March 2020. Lee certainly hopes history will repeat itself. Nvidia's tumble is indeed daunting, marking its worst decline since 2020. But calling it Betamax to a rival VHS might be a stretch. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
DeepSeek's breakout, calling into question the tens of billions of dollars big tech companies have coughed up for AI development. The move lower also raising eyebrows around the valuations of these tech leaders. Joining us now, Deepwater Asset Management, Gene Munster. Gene, I suppose the best way to ask you whether you think this is an opportunity or sort of sign of a greater risk here is to simply ask you, are you picking up more Nvidia at this point?
Deepwater does own Nvidia. I can't say how we're trading it in the near term, but I can say we do own Nvidia. And Deirdre, I think at the fundamental question there is the near term and then there is the long term. And I just want to highlight one dynamic around the near term is that the innovation around DeepSeek is real. And even if you think that they're embellishing some of the cost piece around that, that innovation piece is real. But there's a much bigger question that needs to be asked is not about what the cost to train the previous models were, but to get to that incremental step forward closer to artificial general intelligence, does DeepSeek have some sort of a formula to do that in a cost-effective way? And my sense is that they will not be able to do that. So I think that the spending piece is on track. The reason why I mentioned there's the near term around how these are trading versus kind of, let's say, the near term over the next few days, actually, is that all eyes are centered on tomorrow night with Microsoft, with Meta, Tesla's comments about the hyperscalers, and most investors believe, consensus is that they're going to have some sort of reassuring comments that the market's going to be just, that the AI trade, the hardware trade, the CapEx spending is intact. And when that becomes consensus, if that doesn't yield kind of a rebound in some of these stocks, I think you could see a little bit of a near-term sell-off. If you're curious, typically when you have these shocks in the system, looking back to the run from 95 to 2000, it's about 30 days it takes from that initial shock that we saw yesterday to when things actually bottom, which puts us right in sync with when NVIDIA is going to be reporting their quarter.
Lee stands firm, suggesting the sell-off is an opportunity waiting to be seized. No one usually bets against the giants of tech, especially when there's no VHS in sight. But let's not get too caught up in the tech narrative. Beyond the curveballs thrown by AI startups, Lee turns our gaze toward the financial sector, which he perceives as ripe for potential this year. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
How are you assessing the damage here? Morgan Stanley today cuts the price targets of a number of semi stocks, including Nvidia and Broadcom and Marvell and Micron. Nvidia goes to 152 from 166, whereas Baird today says they'd be buyers of Nvidia on this dip.
So 152, just to use that number on Nvidia, would still be a nice 20% rise from here, which would indicate that you should not sell all your Nvidia. What you should do, though, is evaluate risk. And I watched the show yesterday. Obviously, I'm here today. We are all talking about risk management. And for the last 2 days, I've been talking to a lot of portfolio managers within Cerity Partners, outside of Cerity Partners. There are very few. In fact, I don't think there's anybody who said that now is the time to back up the truck on AI. By the same token, nobody is saying sell all these names outright. That's not the conversation. The idea that these are bust in some sort of post-1999 way is not what people are talking about. Now, maybe that's wrong, but we'll find out. What people are talking about, and by people, I'm referring to professional portfolio managers, is this. Did we go into the end of last week with simply too much risk? Were we too blasé? Consider Oracle for a second, one of the stocks that's in the headlines the last 2 days. It shot up like a moon rocket last week on Project Stargate, and now it's given that all back. You have to be comfortable with the level of risk that you have. Now, what I'm saying to you, just to be explicit, is most people that I'm talking to are talking about trimming risk. What I'm doing in light of that is I'm waiting, because we are going to get more information as the week goes on. I don't want to get ahead of where we are in today's rundown, but I will say we've got earnings coming up from two of the major hyperscalers, Microsoft, Meta. Let's see what they have to say. There are going to be questions about DeepSeek on those conference calls. I will wait for that information, but I think this is a time for everybody to say, not should we sell these all outright, but did we have too much risk?
Nvidia is at the highs of the day. You know, as we're sitting here talking, and Josh makes the case that, you know, some of this might be overdone to at least some degree. It's trying to get 5% back of yesterday's huge sell-off.
Tom Lee's confidence may serve as a beacon for those willing to step into the fray, suggesting that the stock's slump signals opportunity rather than a prolonged downturn. After all, the financial sector's wings are primed for flight, offering a new horizon for those keen to diversify their portfolios. So, what do you think? Does Nvidia's potential rebound beckon you to invest? Or are you pondering DeepSeek? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.